Hello and welcome students. In the last video lecture, I had explained you question number 15 of chapter number 6, that is retirement or death of a partner. Now in this video lecture, I am going to explain you question number 18 of your textbook, that is related to the topic in which the death of one of the partner occurs. Students, till now whatever sums that we had done that were related to retirement, voluntary retirement of any of its partner, and we were giving the effect and preparing the necessary accounts. Okay, now in this video lecture, the sum that I am taking, that is regarding the death of any of the partner. In case the death occurs of any of its partner, then provision has been already made in the partnership deed regarding the actions or regarding the payment to be made to the executor of the partner that has died. Executor means the person who is going to handle or who is going to get the fund on behalf of the partner that has died. It may be any of his family members, either his son or his wife. That is considered as the executor of the partner that has died. So in this type of sum, generally it has been asked to prepare the executor's account and death partner that has died, his capital account and the loan account of the executor. So over here, that type of sum that I have chosen, that is on page number 273 of your textbook. So let's read the question. E, V and M are partners of a firm sharing profit and loss in the ratio of 3:2:1. There are three partners, E, V and M, and they are sharing profit and loss in the ratio of 3:2:1. Balance sheet that has been given to you, that is of 31st March 2016. That is capital of three partners, investment reserve, bad debt reserve, provident fund, workmen's profit sharing fund and creditors. Out of that, investment reserve is an accumulated profit and that is to be distributed amongst the partners in their old profit and loss sharing ratio. Other than that, all other are liabilities. Goodwill, that is the old goodwill, that is to be distributed amongst all the three partners in their old profit and loss sharing ratio. Land and building, machinery, debtors, investment, that is market value rupees 26,000 and book value that is given to you in outer column, that is 30,000. Now students, the book value that is given to you 30,000, but the market value is 26,000. So there is decrease in the value of investment. How much decrease has been occurred? That is out of 30,000, 26,000 value has become of the investment in the market. Okay, so there is decrease by rupees 4,000. Now that 4,000 we will adjust against investment reserve. See, on the liability side, investment reserve has been given to you of rupees 10,000. So out of 10,000, 4,000 you will utilize for the loss that has occurred due to decrease in the value of investment. Okay, so remaining balance, that would be only rupees 6,000. That 6,000 you will be distributing amongst the three partners in their old profit and loss sharing ratio. Okay, next one, that is asset side, then afterwards investment, then afterwards cash, and last that is profit and loss account. Now profit and loss account is also an accumulated loss and that is to be distributed amongst all the three partners in their old profit and loss sharing ratio. As we are distributing accumulated profit, same way we have to distribute accumulated loss. Okay, then afterwards adjustment, in that V died on 1st October 2016. Out of the three partners E, V and M, the middle partner, that is V's, death has occurred, and on which date his death is occurred, that is 1st October 2016. So 1st April our accounting year starts. So 1st April 2016 to 1st October 2016. It means April, May, June, July, August and September. So for 6 months the amount is payable to the partner that has died. On behalf of that partner, his executor will be paid that amount. Okay. Next one, the first adjustment, goodwill is valued at rupees 1,20,000, that is the goodwill of the entire firm. From that, the partner that has died, his goodwill share we have to find out, and that is to be distributed amongst the continuing partners. Then afterwards, new profit and loss sharing ratio of E and M, that is given to you, new ratio is given to you, and even the old ratio that is given in the question. Third one, that is V is to be given profit share till the date of his death on the basis of the profit of last year. Now whatever the profit that has occurred of last year, on that basis the partner that has died will be given the share in his profit or loss till his death occurs. It means for 6 months time period he will be paid the amount of profit or loss. Okay, because his death is occurred on 1st October. So from 1st April to 1st October, 6 months amount of profit or loss that will be paid to the executor of the partner that has died. Okay. Now fourth, 10% reserve for bad debts is to be provided on debtors. Land and building is valued 10% more. 1000 salary per month is payable to V. Now V is the partner that has died. Okay, so salary per month that is payable 1000. So only for 6 months will pay, because after that his death has occurred. So we don't have to pay the salary when he is not alive. So we have to pay the salary for only 6 months. So that is 1000 per month. So 1000 into 6, that would come to 6000. Last adjustment, rupees 45,000 to be paid to V's executor immediately. It means as and when the death has occurred of partner V, his executor will be paid rupees 45,000 immediately. And whatever the balance is remaining, see it has been given, and balance amount in 2 equal yearly installments with interest at 10% per annum. After paying rupees 45,000, whatever the balance remains, that is to be paid to the executor of V. That amount is to be paid in 2 yearly equal installments at 10% rate of interest. So over here, that is not the routine sum in which we are preparing revaluation account, partners, capital account, cash account and balance sheet. Over here, it has been told to prepare, that is V's executor's account and executor's loan account. We have to prepare only 2 accounts, that is V's executor account and V's executor's loan account. Okay, I have prepared over here, you can see on the board, that is revaluation account, V's capital account and V's executor's account. Executor's loan account also we can say it, because whatever the amount that is payable in 2 yearly equal installments, so at the end that much amount of balance should be paid to the executor of the partner that has died. Over here I have prepared revaluation account because there are 2 or 3 adjustments related to change in the value of assets and liabilities. Due to change in the value of assets and liabilities, profit or loss occurs to the firm. So that is to be noted down in the revaluation account. And whatever the profit or loss comes in revaluation account, that is to be distributed amongst the partners. Over here you can see I have prepared V's capital account. You can write V's executor's account also. Okay. We have prepared only V's capital account. It means transaction related to V only we have to post over here. In the previous sums, whatever we have done, we are preparing the partner's capital account, all the partner's capital account. Over here, we are preparing only the capital account of the partner whose death has occurred. Okay. And last one, that is V's executor's account. It means how the amount is payable, including interest, to the executor of V. That we have to show in his executor's account. Okay, so let's start with the calculation. The first one, that is the capital of the partner whose death has occurred. The capital you can see that is given 1,20,000. So first of all, on the capital account of V, credit side that I have written, by balance brought down, that is 1,20,000. Then afterwards, the next one, that is investment reserve. Investment reserve that is given to you 10,000, but already I have discussed that 4,000, that is decrease in the value of investment, that is to be adjusted against investment reserve. So only balance that is remaining 6,000. Now from that 6,000, we have to find the share of the partner whose death has occurred. So 6,000 multiplied by 2 by 6, that is the share of V, right? So 6,000, 1,000 into 2. So here's the share that would come 2,000. So 2,000 share would be of investment reserve of V. So over here you can see I have written on credit side by investment reserve because it is accumulated profit. So by investment reserve share of V, that is rupees 2,000. Then afterwards the bad debt reserve, that is given to you 6,000. Now bad debt reserve adjustment is given to you, that is fourth adjustment. You can see 10% reserve for bad debt is to be provided on debtors. Now what is the value of debtors that has been given to you? 80,000. On 80,000, 10% it would come to 8,000. Out of that bad debt reserve, that is of only rupees 6,000. So out of 8,000 bad debt reserve, whatever reserve that we has created, that is of only 6,000. So still we have to create more reserve of rupees 2,000. Due to increase in reserve, liabilities increased, and due to increase in liability, loss will occur to the firm. So you can see on the debit side of revaluation account, first entry that I have written to bad debt reserve, that is rupees 2,000. How that 2,000 came? 8,000 that was the bad debt reserve that is to be created. Out of that, 6,000 bad debt reserve is already created. So remaining 2,000 additional bad debt reserve we have to provide, that we have written on the debit side of revaluation account. Here we don't have to prepare the new balance sheet. Okay, we have to prepare only the V's capital account and V's executor account. So the simultaneous second entry we are not going to give. Okay. Then afterwards, on the liability side, that is provident fund, workmen's profit sharing fund, and creditors, they are liabilities. So they will be showing in the new balance sheet. At present, we are not going to give effect in any of these accounts. Then afterwards, on the asset side, the first entry, that is of the goodwill. Now that is the old goodwill. Old goodwill that is given to you 24,000. That is also to be distributed in the ratio of 3:2:1. So 24,000 multiplied by 2 by 6. Okay. So you will get the value of the old goodwill of the partner that has died. That is 2 goodwill 8,000. That would be his share in the old goodwill. 24,000 multiplied by 2 by 6. So that would come the old goodwill share of the partner that has died. That is rupees 8,000. Okay. So old goodwill is there. So always it will be debited on partner's capital account. And if there is a new goodwill, then whatever the retiring partner or the partner whose death has occurred, it will be on the credit side of his capital account. Okay. So over here it is old goodwill. So 2 goodwill account, that is rupees 8,000. That is the share of V. Okay. Now next one, that is after goodwill, land and building, that is 2 lakh. Now fifth adjustment is related to land and building. Land and building is valued at 10% more. Of 2 lakh, 10% more, it means 20,000 more. So the new value of land and building, that would come 2,20,000. Due to increase in the value of asset, profit has occurred to the firm. So that profit will be noted down on the credit side of revaluation account. So by land and building, that is rupees 20,000. Okay. So both the effects of the adjustment that has been provided, that is increase and decrease of assets and liabilities on the revaluation account. Then afterwards, next one, that is machinery, debtors, investment, cash, no any adjustment is related to that. Then afterwards, last one, that is profit and loss account, that is 42,000. That is accumulated loss. If it is given on the asset side, then it is accumulated loss. And if it is given P&L account on the liability side, then it is accumulated profit. Accumulated loss will also be distributed amongst the partners in their old ratio. Okay, here we are preparing only V's capital account. So V's share, that is total P&L account balance, that is given to you 42,000. Of 42,000 multiplied by 2 by 6, that is the share of V, right? So 42,000 multiplied by 2 by 6 you will be doing. Then you will be getting the share of the partner, that is to P&L account, that is rupees 14,000. That is a share in accumulated loss. Okay, I'll show you the calculation over here. 42,000 multiplied by 2 by 6. So 6 sevens are 42. So 7,000 into 2, it would come to 14,000. Okay. So it is accumulated loss on the debit side of V's capital account. If it was accumulated profit, then credit side of V's capital account. Okay. So over here you can see 2 P&L account, that is 14,000 share of V. Okay. Then afterwards, after considering the balance sheet, next consider the first adjustment. Goodwill is valued at rupees 1,20,000. Now 1,20,000, that is the goodwill of the entire firm. Out of that, the share of V, that is 1,20,000 multiplied by 2 by 6. 1,20,000 multiplied by 2 by 6. 6 2s are 12. So 20,000 into 2, it would come to 40,000. Now 40,000, that is the share of V. So goodwill, new goodwill will be recorded on the credit side of V's capital account. What account? What journal entry generally we are writing? That is continuing partners capital account debit to retiring partners capital account credit. Over here, partner is not retiring, but his death has occurred. Okay. So entry would be continuing partners capital account debit to partner whose death has occurred capital account credit. So over here on the credit side that I have written by goodwill account, that is rupees 40,000, that is the share of the partner that whose death has occurred, that is of V. Okay, so by goodwill account, new goodwill that will be on credit side, always the old goodwill that will be on the debit side. Okay, then afterwards considering the goodwill point, next one, second adjustment, that is of the new ratio. Third one, that is V is to be given profit share till the date of his death on the basis of profit of last year. On the basis of profit of last year. Now whatever the balance sheet that has been given to you in the question, that is of 1st April 2015 to 31st March 2016, right? Because 31st March 2016 the balance sheet is being prepared. So accounting year, that would be 1st April 2015 to 31st March 2016. So on 31st March 2016, that would be the last year. For the current year, 31st March 2016, that would be the last year. So 31st March 2016, losses occurred to the firm. See, you can see in the old balance sheet, it is given to you P&L account on the asset side value, it is given to you 42,000, right? So that 42,000, in that profit share is to be given to the V, that is the partner whose death has occurred, his share of profit or loss. Over here loss has occurred, so out of 42,000 he would be given his share of loss for only 6 months till his death occurred. His death occurred on 1st October. So for 6 months we have to count the amount of loss of V. Okay, so 42,000 multiplied by 2 by 6, we had already counted, that is 14,000, right? From 14,000, that is for the entire year. Out of that, we have to count the share for only 6 months, because after 6 months his death is occurring. That's why we have to find the share of loss for only 6 months. So 14,000, half of 14,000, that would come to 7,000. Okay, so that would come to 7,000, that you can see I have written on the debit side of V's capital account, that is to P&L suspense account. In bracket I have mentioned that it is loss. If suppose in the question it is given to you P&L account credit balance, that is profit, then it will be written on the credit side of V's capital account. Okay, so here you can see to P&L account suspense account, that I have written loss in bracket, that is rupees 7,000. Also you can see I have shown the working note of all the three, that is total goodwill 1,20,000, out of the share of the partner whose death has occurred, that would be 40,000. That is the new goodwill. Thereafter accumulated loss, that is 42,000 into 2 by 6, that is 14,000. That I have already written the first entry. Now you will say to me that why this accumulated loss 2 times entry has came. The first one, that is distribution of accumulated loss. In that the share of the partner whose death has occurred, that is rupees 14,000. And the second one, that is share in just loss. Share in loss of the partner whose death has occurred, that is to be counted on the basis of last year's profit or loss. Now last year profit or loss would be the same. That means value would come same in both, that is 42,000, 42,000. That's why 2 times the same calculation has been shown to you. Over here for the entire year, because accumulated loss, that is to be distributed amongst all the 3 partners in their old profit and loss sharing ratio. And over here share in loss, that is 42,000 multiplied by 2 by 6, that is the share of the partner whose death has occurred, that is V. Okay, and for 6 months, because 1st October his death has occurred, so for only 6 months his share in loss will be counted. So that comes to rupees 7,000. So both this loss entry, I have shown it on the debit side of V's capital account. So to P&L account, that is the accumulated loss 14,000, and to P&L suspense account, that is loss, I have shown that is the share in loss of the partner whose death has occurred for only 6 months. So that came to rupees 7,000. Okay, so understood the difference. This is accumulated loss and this is a share in loss on the basis of last year's profit or loss. Okay, so this is 40,000 and this came to rupees 7,000. Next one, that is given in the adjustment. 6th adjustment that is given to you. 3rd adjustment already we have done, that is the share in profit or loss. 10% reserve for bed debts already we have done. Land and building value 10% more, that has been done. Now 6th adjustment, rupees 1,000 salary per month is payable to V. 1,000 salary is payable to V. Okay, so for 1,000 per month, then for 6 months that would be 6,000, that is payable to V. Okay, so you can see that is the receivable for V. For the firm it is payable, but for V's capital account it will be receivable. So by receivable salary, that I have written 1,000 into 6, so that would come to 6,000. Okay. You can show in the bracket that is 1000 per month into 6 months, so that would come to 6000. Now the last reducement, that is rupees 45,000 to be paid to V's executor immediately. So 45,000 will be paid to V's executor. Okay. So you can see on the debit side of V's capital account that I have written to cash account, because that much amount of cash will be going from the firm. So cash goes out. So the journal entry that would be V's capital account debit to cash account credit. So on the debit side of V's capital account I have written to cash account, that is 45,000. And whatever the balance remains, at present I have written over here loan account, whatever the balance remains, that is to be paid to the V's executor in 2 equal yearly installments, including 10% interest per annum. Okay, so that will calculate in the V's executor's account. At present loan account, that is the difference of the capital account. Okay, first of all we'll close the revaluation account. Revaluation account will close, then you can see 20,000, both the side, credit side total is more. Difference that would come to 18,000, that will be distributing between E, V and M in the ratio of 3:2:1. So it would come 9,000, 6,000 and 3,000. Out of that V's share that I have written over here, you can see by revaluation account V's share, that is rupees 6,000 in profit. Okay, so total of the credit side of V's capital account, that comes to 1,74,000. 1,74,000 minus all the other entries, difference that would come to 1 lakh. Okay, after paying rupees 45,000 in cash, the remaining balance that would be considered as loan of V, that will be paid in 2 equal yearly installments. Okay, so 1 lakh, that is the loan account that is to be paid to V's executor, that is the difference, 1 lakh. Okay. Now after completing the V's capital account, the main important point, that is how to calculate or how to prepare the V's executor's account. Your dates are very important, so you have to make the column for date also over here. So in case of date, the first, that is the balance of capital account. 1st October, because his death has occurred on 1st October 2016. So first entry on the credit side of V's executor's account, that is I have written by V's capital account, that is the balance of V's capital account 1 lakh that we have found out over here. Okay, so same balance will be transferring on V's executor account on the credit side. So by V's capital account, that is rupees 1 lakh. Okay, now we have to pay yearly interest. Okay, but over here you can see I found the interest for only 6 months, because our accounting year, that would be 1st April to 31st March. So every 31st March we have to close the account. Okay, that's why for the first time that I found the interest, that is only for 6 months. Okay, so you can see on 1 lakh, for 10%, 1 lakh 10% would come 10,000, but for 6 months that would become half. So it would come to 5,000 over here. So by interest account, that I have written the date. Dates are very important, so don't forget to write the date. Okay, so 31st March 2017, that would be for 6 months, because October, November, December, January, February and March. So for 6 months the interest that would come to 5,000. So 1,05,000, that would come the closing balance 31st March 2017. Two balance carried down, that would be 1,05,000. Whatever the closing balance, next year it would become opening balance. So by balance brought down 1st April 2017, that would come 1,05,000. Now again we have to count the interest over here. Now interest is told every year we have to count. So death has occurred on 1st October. Right? So 1 year of his death would complete on 30th September. Right? Accounting year is different and death year is different. Accounting year is 1st April to 31st March. Okay, and death has occurred on 1st October. So year will be completed on 30th September. Okay, so over here again 30th September I count the interest for 6 months. Okay, so on 1 lakh we don't have to count interest on 1,05,000. We have to count interest on only the basic amount that is to be paid. So on 1 lakh again at 10% for 6 months it would come to 5,000. That is for 6 months from 1st April 2017 to 30th September 2017. Okay, so that would come again 5,000. Okay, now it has been told yearly it is being paid. Okay, so you can see on 30th September, so 1st October to 30th September, 1 year happened. So at the end of 1 year, half of the amount equal to equal yearly installment. So 1 lakh 2 parts, it would come 50,000, 50,000. So at the end of first year, we have to pay half amount, means 50,000, and at the end of the second year, we have to pay the remaining half amount, that is rupees 50,000, including interest. Okay. So you can see two bank account, you can write cash account or bank account. Two bank account, that is 50,000, that is the half of 1 lakh, plus 10,000. 10,000, that is the amount of interest. It has been mentioned clearly that he is to be paid the amount in two equal yearly equal installments. That is of 1 lakh 2 parts, that is 50,000, 50,000, including 10% interest. So up till now we have provided 10,000 total interest. You can see 5,000 plus 5,000. So total interest up till 30th September that we have paid, that is 10,000. So at the end of 30th September 2017, you will be paying him 50,000 plus 10,000, that is total 60,000. Now after that we have to find the closing balance at the end of 31st March 2018. That is the next accounting year. So you can see 31st March 2018, I have found second interest. Now how this second interest came? First interest, that was on the total amount, that is 1 lakh 10% for 6 months, that came to 5,000. Now 30th September, you are paying rupees 50,000 plus 10,000, that is 60,000. So now how much amount is remained to be paid to the V's executor? That is only rupees 50,000. From 1 lakh 50,000 you have paid on 30th September. So remaining amount, that is only rupees 50,000. So now interest, whatever you will calculate, that will be on the remaining amount only, that is rupees 50,000. So here you can see I have shown the calculation. 50,000 into 10% for 6 months. On 50,000, 10% would come 5,000. Half of 5,000, that would come to 2,500 for 6 months. Why for 6 months? Because from 30th September to 31st March, you will count that it would come 6 months only. Okay. So September, that's why October, November, December, January, February and March. So for 6 months interest on the remaining balance, that is 50,000 multiplied by 10% for 6 months, it would come to 2,500. So total on credit side, that comes to 1,12,500. Out of that you have paid 60,000 on 30th September. Okay. So remaining balance, that is 52,500, that is still to be paid to the V's executor. Okay. So that closing balance, again for next year it will become the opening balance. So you can see 1st April 2018, that I have written by balance brought down, that is 52,500. Now again we have to count the interest for sorry, again we have to count the interest for 6 months. Okay. So 50,000 multiplied by 10% for 6 months. Again the same amount that would come, that is 2,500. So 52,500 plus 2,500, total that came to 55,000. Now over here you can see 30th September, the first installment that we had paid. So next installment that we will be paying on 30th September 2018. That is the second yearly installment. Okay. Second yearly installment that I have written over here, two bank account, that is 55,000. Now how this 55,000 came? That is 50,000 plus 2,500, this 6 months interest and this 6 months interest. So 50,000 plus 2,500 plus 2,500. So that comes to rupees 55,000. So at the end of the second year, the balance amount of loan that was on the V's capital account, that is paid to his executor. So now the entire amount has been paid to the V's executor. At the end of the last payment, the balance should come nil. It means total should come equal on both the side. Entire amount is paid to V's executor. So that's the end of the sum. This was very important sum and unique and different from whatever sums that we have done till now. So do revise it again from the video lecture. That was the end of the sum, and in the next video lecture I'll be starting with the new chapter that has been remained in between. That is chapter number 2, that is final accounts of partnership firm, that I'm going to start in the next video lecture. Till then, goodbye. Keep practicing. Stay blessed.